Hi everyone, this is Gary and welcome to week 3, and I wanted to go over the templates that you're going to be using for your homework problems this week. We have two problems, P3-36 and CP, which means continuing problem 3-45. These continuing problems are ones that we're going to be looking at the same company throughout this whole process, so that's why they call it continuing problem. But let's first take a look at P3-36. The topic this week is what's called adjusting entries. Adjusting entries are those entries that we do at the end of the period, the accounting period, and usually that's about a year. And at the end of that period of time, there are some things that we have not recorded yet via journal entries that still need to be recorded. Some expenses that we've incurred, or some revenue that we've earned that but yet has not been recorded through the normal journal entries. So that's what we're doing. We're looking at these adjusting entries. And for P3-36, if you see here, your first requirement is to do those particular journal entries. So there are 5 adjusting journal entries that you'll be making for this period, for this problem. And what it does, it does give you what's on page 188 of the text. It gives you an unadjusted trial balance. An unadjusted trial balance means that we have done all of our journal entries, but we haven't done our adjusting entries yet. So therefore, that's why they call it an unadjusted trial balance. So it gives you on page 188 the different balances for our accounts in the unadjusted trial balance. So we're starting off with some accounts that have included all the journal entries that we've done up until this point in time prior to the adjusting entries. So it gives you now 5 different adjusting entries that you have to do. You're going to be doing those journal entries here. And down here, I give you the available accounts that you're going to be using for those journal entries. Over to the right here, you'll see that this is where you do your calculations, for each of those adjusting entries. And if you notice, C is missing. And the reason C is missing is because you don't need to calculate anything. They have given you what the depreciation expense is, so there's nothing to calculate for C. But for A, B, D, and E, those transactions, you have to calculate what it is that we're actually adjusting. So for instance, here for prepaid insurance, you're going to do a calculation that starts with prepaid insurance prior to the adjustment. Then they give you the, the prepaid insurance remaining, and you calculate what is the insurance expense that we're actually going to now record as an adjusting entry. So it's this calculated number here that you're actually going to be recording in your journal entry over here. Okay, and journal entries act the same. You're going to have a debit and a credit. All right, you do the same thing for your office supplies. It's going to be this number that you're going to be doing the adjusting entry for. And then for the salaries, it's going to be the salary expense from Monday through Wednesday, and then service revenue earned. Those are the numbers that you're going to be actually putting into the journal entry. Once you've done your adjusting entries, then you want to go to, and this looks a little bit different, but these are basically your T accounts. Now, what you're going to see, and I filled in some numbers here, some accounts you have not actually adjusted at all. You haven't affected at all through those adjusting entries. So for instance, cash, none of those adjusting entries that we just would have done affect cash. So all we do is we take the balance from the unadjusted trial balance, and it's a debit balance of 12,100. And if you notice this column balance, and then this column balance, and then this line balance. So you want to take your balance that you're bringing over from the unadjusted trial balance, and whether it's a debit or a credit, you put it here. Okay, in this case, it was a debit balance, so you put in 12,100. Now, since there's no adjusting entry that affects cash, that's all we have to do to that particular T account. However, in prepaid insurance, we did have an adjusting entry. As you can see here, there's adjusting entry A. So again, we look at the balance line. We bring over the balance from the unadjusted trial balance, which was 2,300 debit balance. We put that debit balance in there. Now, I'm making this number up, but let's say our adjusting entry was a $300 credit entry. So on the line for A, which is the adjusting entry, we would put the $300 credit, and then since we had a $2,300 debit balance and now we have an adjusting entry that's a credit for $300, we have a final balance of $2,000 in that particular prepaid insurance account. So that's all you do. Other than that, if you're not having an adjusting entry, so you'll see here one for prepaid insurance, you see it here for office supplies, you see it here for accumulated depreciation. Again, you're going to see the letters A, B, C, D, and E for our adjusting entries. That's where you're going to do the calculation like we did in prepaid insurance. Other than that, we would follow what we did for cash when there was no affected adjusting journal entry. We just bring the balance over from the unadjusted trial balance. Once we have all of our balances filled in for each of these accounts, we then bring the final balances in those T accounts over to the adjusted trial balance, because we've done our adjusting entries and it's no longer an unadjusted trial balance, it's a adjusted trial balance. So you just simply bring in the accounts, the balances from these particular accounts, all of them, just copy them over, just simply copying the balances over to here, whether it be a debit or a credit balance. And each account should either be a debit or a credit balance. Then you're going to add all of that debit side up, you're going to add the credit side up. And remember, in a trial balance, your debits must always equal your credits. If they do not, you've made an error. So you would need to go back to your adjusting entries to see if you did something wrong there, or see if you transferred the amounts in from the unadjusted trial balance incorrectly, or did the adjusting entry wrong here. Or maybe you transferred the balance from the T accounts over to here incorrectly. So just remember, your debits have to equal your credits, always, always, always. And then don't forget to answer the question for requirement 4 as well. Now going on to the next problem, CP 3-45, it's very similar. They give you an unadjusted trial balance. They give you the balances there. You're going to be doing 5 journal entries just like you did, but you only have to make one calculation for office supplies. Other than that, they kind of give you the information. And again, here are the available accounts that you use for those journal entries. Then you do the same thing. After you've done your adjusting entries, you come over here to CP 3-45 requirement 1 continued, and you fill in the transactions, these T accounts. Now remember, this is a continuing problem. So you might say, well, where are we seeing all of these? December 2nd, 18th, 21st, 28th? Well, where we get them from is from the previous week, because this is a continuing problem. So you need to refer to the previous week T accounts to see what those entries are. So you want to fill out all of these entries for the T accounts, and then the same thing, you'll get a final balance after you've done your adjusting entries as well. You'll get balances, final balances, and then you'll bring those final balances over to the adjusted trial balance, and you simply fill in whether it's a debit or credit. Again, total them up, and your debits need to equal your credits. Okay, I think that's it. I hope this gives you a good overview of what you need to do. If you have any questions, contact me in the individual forum or the question to instructor forum, or you can contact me by phone during my office hours, 12 to 8 p.m. Arizona time. The number is 602-639-7378. Good luck this week, everybody.